Liquidity is the rising tide that lifts all boats in the market. And that's what we're getting. We have more waves coming in than ever before.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show that gives you the same feeling as finding money in your old pair of jeans. I'm your host, Jay Hamilton, and today we're talking about one of the most important indicators for successful investors. I'm talking about liquidity, and there are some very interesting numbers and some very promising upside that is happening right now that we're going to dive in today. And here to guide us is Lark Davis. He's one of the smartest minds in crypto investing and investing in general, with millions of followers across YouTube and Twitter. Absolute pleasure to have you, Lark. Welcome to the Milk Road Radio Show.
Thanks for having me on, Jake. Excited to get the chance to talk to you.
Oh, super excited. Okay, let's start with, what are your key indicators as an investor that you look at on a regular basis?
When we're talking about crypto specifically, there's a few very interesting things that I like to look at. There's all the classic stuff, RSI, right? Like we just got an oversold RSI reading on the daily for Bitcoin. It's like, hello, well, pay attention, people. Stuff like that I find to be pretty good. It historically has played out pretty well. I like to use simple indicators. I'm a simple guy, right? I look at uptrends. Is the market uptrending? Are we ranging sideways? Are we trending down? What kind of time frames are we looking at here? MACD is always a great indicator for sort of momentum that's building up in the market. Weekly can really help smooth things out. Daily tends to provide a lot of noise, but weekly tends to smooth things out. But, that's all sort of like day to day, week to week. And that's important. And I love talking about the noise. Come on. It's like talking about the weather. One of my favorite topics. What's the price of Bitcoin doing today? But when we talk about the big game, what's actually moving this entire cycle along, it's liquidity. And that's, I think, something that people cannot ignore in the market, because if you don't have money coming into the market, prices of your assets are probably not going to go up, right? You have to understand S&P 500 is where it all starts, right? That's this big, slow moving thing. Tech stocks are a beta to that. Bitcoin's a beta to tech stocks. Ethereum's a beta to Bitcoin. Altcoins are a beta to everything else. Meme coins are degeneracy, whatever. But, but it all relies on liquidity. When conditions are tight, market goes risk off, everything suffers. Money supply goes down, we get in trouble. Money supply goes up, good times are rolling, baby.
Okay, great. So when you say it like that, it sounds so obvious. First, let's look at macro liquidity, and then let's take a look at crypto liquidity, and then we'll bring it all back together and tell everybody what that means for the months ahead. But first, what's the current state of macro liquidity?
Well, this is probably the most key thing, right? Because as I said, everything kind of operates in unison together. Crypto, sometimes it will outperform, sometimes it will underperform, but it's largely, our fate is wedded to that of broader markets. Broader markets not doing good, we're not doing good. Broader markets doing good, we're doing good. And so we have to then focus, at least pay attention to, have on our radar to some extent, the big liquidity picture. So if you look at the global liquidity index, this is super interesting, because look at this chart, then go back and look at how markets have largely played out, right? The global liquidity index, when it bottoms out, markets tend to be usually nearing a more bottoming phase. It's not always perfect, but it generally kind of has a strong rhyming factor. So we can look back at 2022, great example. Now, the FTX collapse was a bit of a black swan, right? We didn't necessarily know that was coming. But it's interesting to see that BlackRock actually launched a private Bitcoin fund in August of 2022. Not a lot of people know that. A lot of people were paying attention at the time, but they were smart. And why did they do that? Because they knew that liquidity was bottoming out. They knew that we were getting ready for the next cycle of the market, and they were giving their private clients a pathway into Bitcoin. Price was $18,000, $19,000. Then we did go a little bit lower with the FTX collapse, but they couldn't have foreseen that. Now you can see here on that chart that in 2022, liquidity bottomed out. And then what started happening in early 2023, markets started going up. Now, China was the first one that started printing. They brought us out of the global liquidity slump. Their central bank started injecting money into the market. Early 2023, we saw the Brits inject some money. We saw the Japanese start injecting money. And as we see now, over the past year approximately, more and more liquidity has been coming back into global markets, and we've been seeing that slow rise up. And as you can see now, we're at a bottom recently, and now we're gearing up for the next major liquidity cycle. Now, It's nothing, of course, goes up in a straight line, and it's going to be messy. It's going to be lots of drama along the way. But you can see that we're looking right now at a major flow of money coming in. That is the global liquidity index. And there's another chart called the global M2. So this is really the supply of liquid money in the market, right? And it's starting to trend up. Very important chart here. Very important chart here. Also shared by Game of Trades, but it's been going around social media here for a few days. But essentially, what you're seeing is that the money supply is not contracting anymore. It is now expanding. And when the money supply expands, the M2 money supply expands, markets tend to follow higher. Okay. You'll see zones of contraction. And we were actually in a negative territory for a while, which hasn't been happening for a while. But when you see zones of contraction, you see zones of expansion. We're now have gone through a massive contraction. As you can see, that was just this like Burj Khalifa like structure on the chart there, and it absolutely collapsed down. But now we're back in the positive territory. And we're just starting. That's a very, very interesting thing to note is that it's just starting. If you're listening to this right now, you have to understand that as crazy as markets have been, as much gains have happened, right? Bitcoin is only now it's just retesting this high. I know we got up to 74K. It's the new all-time high for Bitcoin, but it's really only a few $1,000s over the previous all-time high. We're in that zone still of trying to retake the previous highs, really flip it in a serious way, turn that all into support. We're still very early in the cycle, and the liquidity cycle is really just starting. Again, it won't be straight up. There'll be all kinds of drama along the way, but the liquidity cycle is just starting, and that could run for a year, that could run for 2 years, indeterminate at this point, but it is a very interesting time to be paying attention to markets.
You mentioned what impacts the liquidity supply? Is it just governments printing money? Is that the main thing that is bringing more liquidity in on the macro level? And who's doing that right now? You mentioned a few. How much are we seeing from these various countries? I think, is it China that's really leading the way here right now?
China definitely let us out of the slump in 22, and China has been largely leading the way as they try to restart their economy from all the sort of the lockdown and stuff like that. I mean, China, of course, very famously had the most crazy lockdowns, and it really affected their economy very seriously. So that's why they started printing late 22. And even just recently, China announced another $160 billion giant printing spree, right? And they keep announcing these. That's one of the biggest ones that they've done recently, but they've done smaller ones since then. Japan, of course, right now is facing an existential crisis with the yen, and they are forced to make some interesting moves. So they've been having to be forced to inject liquidity into the market. European economies have been doing similar moves as well. But the Fed has been secretly printing or injecting liquidity, we can say, in the market for a while, and actually started with the bank collapses in 2023. You see, when those bank collapses happened, they rolled out this sort of short-term lending program, quote unquote, to help the banks be able to access liquidity without having to sell their assets. They're at massive losses. So currently, US banks are sitting on over $500 billion of unrealized losses with their mortgage-backed securities and their different bonds that they have. And so when people come to ask for their money at the banks were forced with a choice of, we have to basically go and sell these mortgage-backed securities, for example, at a big loss in order to give John back his money, but then everyone else is screwed because, hey, we invested all your money in the stuff that was supposed to be safe, which of course, now we're learning problematic. So the Fed was already backstopping with massive liquidity for that, now to the tune of over $500 billion that they've had accessed from that lending facility. But then it's getting worse because we're seeing more and more dysfunction in the bond markets, and people are showing up a bit less to those bond markets than have been previously. And so now the Fed has been buying about $2 billion a week, started 2 or 3 weeks ago. They've been buying $2 billion a week, and they're going to be doing that for quite a while of bonds. So, the money's out there, and we're talking big sums of money. And I know that for $1 trillion economies, $1 billion here, $2 billion, $160 billion there, it all adds up because, again, we're at the start of a liquidity cycle, and it'll get crazier as we continue to go through it.
What if we move from sort of the macro situation over to crypto? And what are we seeing that's impacting liquidity in crypto specifically?
Well, of course, everything we just talked about matters, right? Because it creates a risk on environment where money's starting to splash around markets more broadly, and some of that splashes into crypto. But if we look at crypto, we are in a wild situation right now, because what I've talked about with the Bitcoin ETF is that this is a once in a market liquidity event. Okay. And that is something that's really hard for maybe people who haven't really paid attention to markets to understand, because you go back and look at the gold ETF. That was a once in a market for commodities and gold specifically event. That liquidity injection saw the price of gold go from $400 to $2,000 over a 7-8 year period. Of course, it took a while for all the money to flow in, but that was back then when people didn't have Robinhood app where they could go and ape $20 into Bitcoin in 10 seconds on their app. Times have changed, and Bitcoin, of course, is a faster moving asset. So we've seen huge flows of money already. I think we're up to about 14, 15 billion of net inflows into Bitcoin so far. And of course, when you start seeing liquidity hit the top, but people always ask me this, well, okay, great, but that's just for Bitcoin. It's going to be a secular bull run for Bitcoin, right? Only Bitcoin's going to go up. Well, no, now we have an Ethereum ETF coming soon, SEC, dragging its feet, of course. We have a Solana ETF that's probably going to come maybe by the end of the year. I don't know. We'll see how soon that comes. That, of course, it opens the floodgates to Chainlink ETF, Avalanche ETF, Polkadot ETF, whatever else, right? But the key point is that Bitcoin has always been the tip of the spear in terms of liquidity for the market. And you need to understand that this is how the cycles work. Bitcoin runs up. People who hold Bitcoin, old whales, all this kind of stuff, they cash out and they want to then double, triple, quadruple their money. So what do? They double down into altcoins and stuff like that. And that liquidity flows, right? And so we're basically having TradFi money coming in, billions and billions of dollars, and it's only starting. It's only starting. We're probably going to have 100 billion net inflows for Bitcoin by the end of the cycle. Maybe a little less, maybe a little more, but something like that. And that's a crazy amount of money. Again, once in a market liquidity event here that allows whales to sell into that strength, that allows people to not even sell, but to take loans versus their Bitcoin and then take that money and speculate on altcoins and stuff like this. So it flows right down. It flows right down. Now, we of course talk a lot about the American Bitcoin ETF, obviously is the biggest one, but Brazil and Canada, they've had Bitcoin ETFs for a while. Europe's had a variety of different ETP, which is basically ETF-like products. So that liquidity has been sloshing out there, but nothing is as big as US markets, except perhaps not as big, but perhaps significantly impactful Chinese markets. Now, I know that the Hong Kong Bitcoin ETFs have been off to a bit of a slow start. Okay. But that's because they haven't been approved for Stock Connect yet. Stock Connect is a program which allows for Hong Kong Stock Exchange assets to be traded in Shenzhen and in Shanghai stock markets, which are mainland Chinese stock markets. There's been a lot of indication that that is going to happen. It's only a question when that happens. And when that does happen, that brings Chinese liquidity, Chinese money into Bitcoin and Ethereum specifically, because those will be ETF products available on their markets. You have Australia, it's got a Bitcoin ETF out. Germany, UK have recently approved ETP products for their markets. So a lot of stuff's happening out there. A lot of money's coming in at the top of the market for Bitcoin and Ethereum. Okay. And that then starts filtering down, as always happens in cycles. This is just, and people always say to me, well, this is like, nothing's ever like this happened before. There's always a catalyst. There's always a spark. There's always some kind of liquidity injection that happens in the market that allows markets to rise again. This is what's happening this time. It will be big, and it's here. It's very exciting.
Yeah, it's amazing when you break it down like this, and this is why we love having you on the show, Lark. You make it sound all so incredibly simple. You said at the beginning you're a simple man, and this is simple stuff, but we all fuck it up. That's what
We
it
all
really
fuck it up.
comes
That's
down
right.
to. We're humans, and we get greedy, and we get FOMO, and we fuck it up. Okay, so ETFs bringing a lot of liquidity into crypto. We've already seen it with Bitcoin. We're seeing it, as you mentioned, in newer markets coming, and we're also seeing it with ETH ETF coming this week, next week, sometime in the next 2 weeks. Definitely coming soon. Unsure exactly what it's in the US, I'm saying. What else is impacting liquidity within crypto that you're looking at?
I think there's two interesting things that have been going on recently, and very crypto specific narratives, but great for us as crypto investors. And one, of course, is a historic level of on ramps. I've been covering news stories for the past year that, had I covered any single one of those news stories back in 2017 when I was making videos, be like, oh my gosh, this is the big thing. Wow, new paradigm of money. I can't believe this person or this institution. So, like, was it last week or 2 weeks ago? A big Brazilian bank, one of the biggest banks in Brazil, 60 million customers or something like that. They're now offering Bitcoin to their customers. What? That's crazy, man. almost barely a blip. Most people don't even know what happened. Oh, no, another bank offering Bitcoin to their customers. Who cares? This is crazy. We have historic levels of on ramps for Bitcoin that have happened over the past 2 or 3 years. Austrian Post and Croatian Post and all these weird little, they're banks, right? They're banks as well, these post offices in these European countries. And so all these on ramps have been opened up beyond the ETFs. So this is for people to buy real spot physical Bitcoin, put it in their wallets, right? Massive. What's happening? The ability for people to access Bitcoin. And again, top of the spear, right? Tip of the spear, right? Top of the pyramid, however you want to think about it. Money flows down from there. It's absolutely crazy. The Bitcoin ETFs are just one important part of the picture, but they're just part of the picture. And what you need to have a market go up, you need to have that liquidity, because liquidity, you need to think about this. Liquidity is the rising tide that lifts all boats in the market. And that's what we're getting. We have more waves coming in than ever before. And we can even look at stablecoins as another great indication of this. And stablecoins have, in a weird way, become the killer app of crypto, haven't they? Beyond, of course, meme coin degeneracy, obviously. But we've had $30 billion increase in meme coins this year. Meme coins are good business. People love them. But the amount of stablecoin transfers that happen globally for payments and remittances and stuff like that are increasing all the time. And it's quite interesting because I talk to people, and you see these stories and stuff pop up. Stablecoin payments are incredibly popular in a lot of places in the world. You may not be using it if you're in the West listening to this, but I'll tell you what, there's a lot of people in the world who love stablecoins. And that increase of money in the market, again, is good. More stablecoins out there, the more money it can ape into your meme coins, your dog coins, and whatever else.
Yeah, it's we just did a big episode that came out yesterday, really presenting the bull case for stablecoins and the amount of, as you said, the amount of news that comes out on a weekly basis that is very unsexy news. Meme coins, sexy news. Everybody loves it. Everybody gets hype on big gains. But some bank that's, now offering crypto to their customers, or, another partnership between a couple fintechs. Nobody really, Stripe just announced a massive partnership with Coinbase, which we talked all about on yesterday's show. And it kind of goes unnoticed, but these are the rails for new financial products like stablecoins that are going to bring trillions and trillions of dollars on chain in a way that ironically was like really the reason that crypto was invented in the beginning was just to improve peer-to-peer payment. And in the middle of it all, we've all gotten caught up on speculation of a dog with a hat or a cat or who knows what. And we've kind of lost our way. Like, come back to the boring stuff, folks. There's good money to be made here.
Well, how can you ignore the bleeding edge of technology? I mean, come on. They took a dog and they put a hat on it. Genius. Genius.
Okay, so what's the downside though? Is it all sunshine and roses here? There's always another side here, Lark. What are we missing?
Of course, of course. So we're at a very exciting phase, I believe, in the market where we're in a start of a major liquidity cycle. The downside is that liquidity cycle ends at some point. You either sell and get out, or you lose everything. Because when the liquidity cycle dries up, I don't know how long it's going to last for, but when the liquidity cycle dries up, and it will dry up, it always does, everything goes down. Stocks go down, everything else. Remember that whole conversation we had about the beta, the beta, the beta? Everything goes down more. Your meme coins are going to go down minus 99.99999%. Okay, so you have to be ready for that. You have to be ready for that. I like to always say that you need to take your profits or the market will take them for you. And it's very, very true. Okay. You have to keep that in mind, that great going up, bad going down. Okay. So keep that in mind. And also keep in mind, very crypto specifically, we see how fast liquidity is moving. We're not talking about like Bitcoin and Solana and Ethereum. Okay. They're massive assets with huge liquidity all the time. When you start going into the more speculative ends of the market, your meme coins, for example, liquidity can dry up overnight. Okay. So you can be stuck real fast holding bags, people. So you need to keep that in mind too. When you get into a meme coin, for example, and you put in $100 and it goes to $5,000, can you even sell that for $5,000 a week later? In a lot of cases, you can't. You got paper gains, but you can't even cash them out. So keep that in mind when we're playing these crazy games in the market, that liquidity matters big time in crypto, especially for your more speculative stuff where there may not even be enough liquidity to sell. So keep that in mind too.
So is your advice to, anybody who's listening to this episode, they're on board, they're okay, I see liquidity going up. How does that play into the way they should be allocating or positioning their portfolio to succeed over the next, as you said, don't know what the timeline is here, next 12 months roughly?
So I think that the phase we've entered into the market right now is largely, at this point, in my opinion, the best buying opportunities obviously are behind us. The second best buying opportunities kind of nowish, and those are going to dry up pretty soon, in my opinion. Now, it might be days, weeks, or months, but we will enter the next markup phase in the market before too long. When that happens, a lot of the prices you're seeing on stuff right now probably are not going to come back. So the question is, you need to allocate yourself. Okay, I'm pretty balls to the wall allocated currently. So I haven't actually been buying a whole lot recently. I bought some more Ethereum the other day, but nothing too crazy. But now the tricky part actually is just to hold through the liquidity cycle, right? To hold long enough to maximize gains as much as you can, right? You're not going to perfectly time the top, so just get that idea out of your head, right? Throw it away because it's not going to happen to you. There's going to be like one guy that perfectly sells the top on whatever asset, and you're probably not that guy. But if you can get enough of the move, perfect, right? But now's the trick. You got to hold through it. And you can always add more positions on dips and stuff like that. Sure, I'm not saying you can't, right? But the best period to have allocated yourself was the last about year. We're going to be exiting this major period pretty soon, in my opinion. And then if the liquidity cycle plays out as we expect that it may, you just got to hold through it and be ready to take profits at some point later on. So watch out for all those things from the central banks. Hey, we're going to start big, quantitative tightening and stuff. We're actually, again, we're at the start of a cycle. So those news stories will come in 12, 18 months, something like that.
And that's a further reason to listen in to the Milk Road Show, because Lark will be with us every Tuesday moving forward, and he'll be making sure that we know when that liquidity cycle is going in the opposite direction. Lark, thanks so much for your time. Thanks for joining us today.
Thanks for having me. Appreciate it.
In case you missed it, here's what else you need to know in crypto news today. It looks like we can expect the ETH ETF in the US the week of July 8th. Eric Bokunis, the senior ETF analyst at Bloomberg, tweeted his updated prediction, and he now believes that the approval will be delayed till after the Independence holiday this week, making it likely that the ETH ETF can be expected sometime the week of July 8th. Also, Pudgy Penguins is building their own L2. On Friday, Igloo Inc., the parent company of Pudgy Penguins, announced they acquired Frame, an L2 focused on the creator economy. This acquisition aims to develop Abstract Chain, a layer 2 network for on-chain culture and communities. Make sure you listen to the show later on this week because we have Luca Netz from Pudgy coming on to share more. Finally, Circle, the issuer of USDC, which is the second largest stablecoin in the world with circulating supply of over 30 billion, has announced that its USDC and EURC, a euro stablecoin, are now compliant with the EU's markets in crypto assets regulations. This makes Circle the first major stablecoin issuer to achieve this milestone and means that Europeans can now access MiCA compliant USDC and EURC directly through Circle Mint France. Talk about more liquidity coming into the space. That's all for today, folks. Thanks for listening in. Have a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.